Hi, everyone. Welcome to Twin Shores Financial's bi-weekly market update, where we share what we're seeing in the traditional and digital markets. I'm Alex Kaminer, the host, with Tim Nihil, a certified financial planner, and Alex Krieger, the digital markets analyst. For today's big topics, we're going to be talking about the biggest risks in banks, CPI, why some stablecoins are under scrutiny in the crypto markets, and just overall alternative investments in commodities and what we're seeing there. We hope you enjoy the content. And if you do, please like, share, subscribe, and comment below. Tim, off to you.
Awesome. Hello, everyone out there. Hope you are doing very well. Yeah, a couple of things, just what's changed in the past couple of weeks. I don't think there's really a lot that has changed. Some of the things that are standing out as we continue to get more information coming out on the markets and the Federal Reserve policy and this and that and other things. I mean, it's just sometimes information overload. But there are definitely some underlying themes that are standing out that we're pretty confident we're spot on about. So if you were to ask me going into 2023 for any investors or savers, if you will, across the country, what is one of your biggest risks? I would say the money in your bank is a big risk. We've talked about that in some of our reels and shorts. And a couple of us who have worked inside of a bank understand actually what a bank is and what it does. There's a significant possibility that bank bail-ins are going to happen. And if you're not familiar with a bail-in, it basically means that there's a possibility you could walk into your bank and you do not have access to your money. It's simple. And the story on November 9th of 2022, this was a topic of conversation with the FDIC Insurance Committee, and it just seems more and more likely that we're going to have a banking issue in the United States of America. And I think part of it too is if you just kind of pay attention to what comes through the television stream, you can hear the messaging. And to me, what I'm seeing, it's just, you can tell there's the old way of doing things is dying off. And there's this incredible, I would say, grab or lashing out to hold on to what has worked in the past when we know that it's just not going to work in the future. So we're not here to try to create a bank run or anything like that, but at the same time, we're here to educate people, right? And the biggest problem with banks that people have is they think their money is safe. And you have to understand that when you walk into a bank, your money is theirs when you hand it over. That money is not yours in your bank account. In 2009, when Obama signed Dodd-Frank, there was a provision in that bill that's flipped everything over, which means as a person using a bank account, you are an unsecured creditor of the bank. Unsecured, keyword. So we're just telling and helping educate people and saying, listen, you got to do your homework. In recommendations with our clients and people we're talking with, we are saying don't keep any more than maybe 2 to 3 months worth of expenses and spending cash in your bank account. Outside of that, anything above and beyond, get it out. Open a brokerage account, put it in your brokerage account. If you have an advisor, use one of their accounts, but get your money, your excess money out of the banking system. Secondly, one of the things that we're seeing, which is it's just a continual trend, and it ties into everything else going on, is we think that over the past week and a half, we've seen a little bit of a dip in the commodity cycle. There's a lot going on with oil, strategic oil, all sorts of other stuff. Ultimately, historically, commodities are at the lowest they ever have been. So we think there are some tremendous buying opportunities in the commodities market. And quite frankly, I think it's a good place to have some money and, protect yourself against the currency issues that countries and even we have in the United States right now. It's a good protection strategy. And I think the payoffs are pretty fantastic. Outside of that, it's, we tend to do a lot of alternative investments with our clients. In fact, we like to use them to build the foundation of their financial house, if that makes sense. Right. So if I have investments that are doing 5, 6, 7% year over year, I'm not in the market. Right. And I know that 30 to 50% of my money is going to be bringing me that much cash flow. I'm not watching the market as much. Right. Like if you're out there and you're watching the markets and worried about how your accounts are doing, you're 1,000,000% invested incorrectly. You have to change that strategy. And there has been a massive increase in appetite from investors across the country who are pulling their money out of the stock market. They're pulling money out of the bond market because bonds are garbage right now. And they're going and looking for new places to invest. And if you haven't done your research on alternative investments, it's things like real estate, franchises, farmland, preferred stock, things like that, which you don't have to worry about the volatility of the market. And your financial life doesn't depend on if some banker that lives thousands of miles away from you raises a rate a quarter of a point or 50 basis points, whatever. You don't care, right? So alternative investments have a lot of play, and I think they're part of what is true diversification for investment strategy. Most people think and hear diversification, they think stocks, bonds, cash. That is just such a limited point of view. There's a whole other investment world that is out there, and we're just seeing a massive uptick in the appetite from people that have not had that don't have access to this because they're doing it direct with like a Vanguard, Schwab, E-Trade, etc., or their financial advisor just doesn't have the capabilities because that's not their model. So we're just now getting a lot of phone calls around, hey, I need to do something different with some of my money. And that's where we're coming in and helping educate people on the alternative investment space, how to properly fit it into your investment strategy, and then how to make that work long term. So you're seeing a massive transition happening right now, especially in the United States. So outside of that, I think now we're just at the point where it's a tale of two economies. You have this old financial economy that's this massive bubble that the Federal Reserve is hell-bent on popping, for better, for worse. And then you have the real economy, which is still real estate, commodities, hard assets, tangible assets, gold, silver, Bitcoin, etc. And now you have to figure out, well, do I play one? Do I play the other? Or how do I play both? So I think it's becoming a very, very unique time as an investor. But as we continue along this year and kind of reading the tea leaves, I just see there's going to be some massive investment opportunities moving forward. And it's just a couple of things have to play out.
Awesome. Well, do we want to talk about the crypto markets a little bit as well, Alex?
Sure. I would say we had a little bit of a dip last week or this past week due to regulation scrutiny from the SEC going after Binance and Binance Dollar, shutting down Paxos, pretty much going after Binance Dollar through the company that mints the coin, Paxos, which Tim, you were telling me that's a New York bank or New York company?
Paxos is a New York bank company, and in fact, they're providing a lot of back office for Bank of America. So I think that Bank of America is a pretty decent sized investor with Paxos, as a few other companies are. My personal point of view is it's the banking system knowing that something got created that is completely going to change the way they do business.
Correct. They don't like losing the control that they have over everything. So it's really interesting. I was listening to a podcast and an article. We're going to put it in the description below. They're talking about choke point 2.0, where in the Obama administration in 2010 through 2013, banks were limited on what companies they could work with. More high risk companies they had to diversify and get away from. So that means anywhere from crypto to guns and ammunition companies to other risky assets. And I think we're in the same process again, going through this and then picking and choosing who they want to go after and scrutinizing those type of companies. I also see 4 new countries signed up with the CBDC program, which is starting to get pretty scary if everyone starts to comply and start working with the CBDCs. So Russia, Saudi Arabia, India, and UK just started new pilot programs working on getting them started. So
Yeah, and
it seems like all the central banks are going that route to control the money supply in a sense.
right. And for people out there that do not know what a CBDC is, it's a central bank digital currency. And it means that the central planners, if you will, or the bank that issues your currency can tell you how to spend your money, where to spend your money, and control when you have to spend your money by. And if you don't, you lose it.
Correct.
So this is a completely catastrophic thing for human beings across the world. In fact, it reminds me of a quick story. Can I tell a quick story?
Go for it.
Yeah.
So I had a meeting last week with a client. She came to the United States from Italy, and she told me about in 2002 in Italy, they came in and replaced the Italian lira with the euro, and all Italians got half of what was in their bank account. So if you had $10,000 worth of Italian lira in your bank account, you got $5,000 worth of euros. And her words to me were, I'm not going to give you the crux of it or all of it because I have to censor some of it. But she says, Americans are absolutely about to lose their wealth and their money, just like the Italians did in 2002. And Americans have lost touch with who they really are. And they're all brainwashed and they're not paying attention to what's truly happening. So it goes back to the banking risk we just talked about. There's a significant probability of that happening in the United States. But as she said, the only difference here is if banks screw with people's money, this place is going to revolt. That's the only difference between the United States and the Italians. Not
now,
my story. I'm just sharing the story. So
when they transferred and did the 50% decrease in the money, right? 10,000 to 5,000, was the euro converted into like, like right now the conversion rate to a dollar is $1.13. Was it like $1.32 maybe to make the difference up, or am I?
No. It basically, so let's say that the United States goes digital, right? With the digital US dollar, which is being talked about.
Yeah.
Okay, so you have $10,000 in your bank account. Here's 5,000 USD dollars, and that's it. And it's a 1-to-1, right? It's a 1-to-1, but instead of having 10,000, you get 5,000. It's happened. It's happened to a lot of countries. It's happened to a lot of people.
Yeah, but how do I say this? My understanding was they went from one currency to the euro. So the lira to the euro, that's where it'll get confusing because you're going from the dollar to another dollar. You know what I mean?
You're only going to get 5,000 instead of 10,000.
Which is scary stuff.
Right. And this is being talked about on a lot of different podcasts by a lot of different people that are very, very high up and well connected. So if there was something that has been coming across our channel, which is setting off red flags, banks are in trouble.
Yeah, just go. And a lot of it's public information, right? The FDIC video we did a couple of weeks ago and everything. All that information, all their meetings are public. Like they're on the FDIC website. You can go there, and if you want to sit and find out actually and listen to the video and hear what they say, it's some scary stuff.
Sure. This is a different time. We haven't seen this one before, ever in history. It's a little bit different. Our job, as with everything, right? And if you're a smart investor, your job is to look at all the risks that you have across your life and figure out how to manage and mitigate risk. So if you play this right, you'll have some very, very successful outcomes. But you have to do your homework, or at least work with people that are doing their homework.
Right. Which we are.
Got a question for you, Tim. Do you think where banks have the bail-in, a bank bail-in, do you think that could happen to crypto exchanges or other, like the crypto bank Silverhorn and Signature Bank? Could that happen where they bail in through your crypto assets and so forth?
I don't think anything's outside the realm of possibility.
Okay.
There's always a possibility, right? And this is the issue that I've always had with financial planning and the investment side, because it's like, here's your asset allocation. It's like, it's not stocks, bonds, cash. Like, you have to invest in different tranches of types of investments. It has to be real estate. You have to have commodities. You have to look at farmland. You have to look at franchising. You have to look at equities. You have to look at cash flow and fixed income. And then now we're in a world where you have to diversify across countries now. You have to have money in Europe and in Asia, and you have to have diversification, not just at home across a basket of stocks and bonds. Like, real diversification is so much more than that. And I don't think a lot of people are prepared for it.
I would agree on that.
Especially in the 401k land.
On behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed it and want to stay up to date on the markets, please tune in every other Wednesday now, because we're switching the day from Thursday to Wednesday for all of your financial information. Please don't forget to like, share, and subscribe. And if you have any questions or comments, please don't hesitate to put them down below. Tim, Alex, any last words?
No. Do your homework, invest wisely.
That, and Gary Gensler came out and said, not your keys, not your coins. So our
There you
phrase
go.
is sticking with him even.
You and Gary can hang out together.
Exactly.
Have a good rest of your day, guys.